Well, good weekend, all. And happy birthday to America. You know, July 4th, Independence Day. We are coming up to, obviously, July 4th, right around the corner here. It's an interesting time, and it's full of FOMO. And before I get into that, remember, this is your weekend edition of your SPDR ETF subscriber video. It is the 30th of June, the last trading day of the month, the last day of the quarter, and it's FOMO time. What is FOMO, by the way? You always hear that term. It's fear of missing out. Got it? I used to say fear of moving out. I was hoping the kids were moving. Fear of missing out. And what happens is the market moves and people just start looking at it, especially in the stock market, and they go, I got to own this. I blew it. And instead of buying breaks like NVIDIA just had as an example, they just want to jump in and hey, look at the market today. I can't stand this. I got to deploy money. And inevitably, they deploy it where the market's already made the move and the market then corrects and they're pissed at themselves, blah, blah. It doesn't mean if you're an investor that you did the real wrong thing, but probably could have done it better. With that in mind, before we get too far, and I got a lot of ground to cover with you, I want to cover this important thing. We're having our Independence Day sale. Any of my research is on sale. This is not the charting courses. So you want to get my SPDR ETF subscriber video. Normally, to give it a try, it's $8.95. To give you an example, it's going to be what, $4.97 for the 30-day period. After that, if you want to stay with it, it reverts. You want to buy it for a year. Normally, it's like $160 or $170. It's half of that. You get one shot. You have to make the decision right up front. Do you want to buy it for the 50 off for the 30 days? Foolish, but think about it. You go out to McDonald's, you buy a burger, you buy their packaged meal, you are paying more than you're going to get my 30 days worth of data for. Just think about that and come on. Take advantage. Don't undo yourself. You're going to be surprised how interesting it gets, okay? You go to IraEpstein.com under research. You don't have any codes. You don't know anything. Our system will take care of it automatically. You can move up here. It'll do the same thing for you. So let's talk about now the markets. Let's go back to the chart action because that's where I want you to be. If we continue with Rivian, it has been drifting sideways, but it's starting to act like it's basing. You'd have to get through all this in order on a weekly chart to say, I don't like it. Why? Well, the market's now got an outside week up. If you've taken my outside day course, which is the same for the weeklies, if this week's low is taken out, you've destroyed the action. If it's not, what happens is the market, it's called a continuation pattern. It starts lifting the market to a number. Now, where did this all happen is the interesting spot. This market has been under in Rivian, the 18-week average. Only over the past month has the market been fighting, and now it's over it. So I don't know if this is a long-term bottom or not. I don't walk on water, but as a chartist, that's real interesting. As long as I don't get back under this low, it certainly looks to me like it's going to try the upside. And the first upside target is right here. If you use Bollinger Bands, and I explain it all the time, that's the first logical target. You pull back, you might want to churn in here for a bit. Wouldn't surprise me. Do I think you're just going to take that and run away? I do not. But I do think that now you've got interest in the market and you should be going, was that it? And why? When's the last time you hit a Bollinger Band? I can walk you back on this chart very far. You're finally over this 18-week average. You broke from it in November. Is this where electric car companies are catching their footing? Momentum-wise, up, but getting overbought. So I'm going to stick with what I said. I don't think you're going to get back under this low here. I think a low is in place in it unless something really terrible happens to the company. In Schwab, we're getting everything carries these markets higher. Now, I like Schwab as a company. I've said that. It is finally, for the first week, I know this sounds crazy, almost since, believe it or not, February. It's the first time it's back over that average. Here, too, I think the investors are now plying in, saying they like it as long as you don't get back under last week's low. What the heck was last week's low? Last week's low, this is the low that I care about, is right here, 52.51. As long as the market doesn't get under there, you got a shot maybe. You can get up here first and then eventually to the 66 level. I'm assuming that there's no banking problems along the way. They already expect you're going to get the Fed to do 2 more interest rate hikes, and the market's not caring about it. You take out 52, 51, I think you got to go back and recalibrate what you're doing. Do not reach for the same thing in KRE. It is not over the 18-week average. It's a bounce in a market that's still in trouble. The same in KBE. In fact, in KBE, an all-out sell signal happens if the market takes out 34.66, the way I chart. This is the resistance. You take that out, you'd have lower highs, lower lows. You're no longer oversold. You'd open the door for here. What would do that? What would do that is, again, the Fed raising rates, the capital requirements, the hot money that a lot of these type of bank indexes are made up of. What do I mean by that? Banks attract money to make them look, oh, look at how much better. Look at all the deposits that we're getting. But at what cost? And to attract that money, sometimes they don't go far out. It's hot money. They'll give you short term. So I want to be with you for 30 days. I want to be with you for something else. Just keep your eyes on that. Different things happen. In XLI, overbought over a band, you buy it. I want no part. I don't understand why this market keeps going up to begin with. On the chart, I'm a chartist. Forget the name on the chart. Could care less. You rarely stay over that band. Now, is it a breakout of a broad sideways action? A little bit different. Then I'd understand it. But this isn't a breakout pattern. I'd need another week to do what this week did. Make a higher high than this week, close right at the top bars of the week. Now, I'd say something has changed. Barring this, no, I don't see that. The energy sector, stay away. OPEC meets this week. We don't know what they're going to do or not do. It's going to be a rough week for it. They've got their hands full. Russia continues to pump like there's no tomorrow. They lie that they've cut production. Maybe I've read some reports that give them credit for 200,000 barrels a day. They're supposed to have done 500,000. They haven't done that. And I've read other reports that go, that's nonsense. They didn't even do that. They mask and they show you the ways. These seaborne ships that carry it are saying they have not cut the production. So we will see which way it goes. Yes, there was some maintenance issues that had to go on, and they lost barrels a day. But now that those are coming back, what's it all going to be? Let's hear what OPEC says. Don't be a hero. Let the big boys tell you what to do. In the foreign currency markets, okay. Could Miss Lagarde have been any clearer? As the head of the European Central Bank, she's raising rates. The same thing with the U.S. and the Bank of England. So you're getting a pullback, but notice how you stay over the 18-week average. It means you should have a general bias to the upside. But no, I would not tell you you're a buyer. Take out last week's high. I get very interested. Why? That would then give me higher lows, higher highs over these 2 moving averages. I want to be involved. Could I be clear on that? In the gold market, bear market bounce. You're oversold. I can see it, but I don't see why anybody buy gold right here. Why do you want to own gold when you're making 5.25% interest? You think you're going to make that in the gold? The government's out to fight inflation, not create inflation. The market has got a peak in place. Be careful of it. Gold miners, how good can they be if the gold isn't good? Still bearish here. A lot of resistance on rallies up there. But I'm not telling clients to go short when it's oversold there. I'll pull back the horns, and then I'll tell them later on rallies, get rid of that oversold. I give you the reasons if the chart action is there. In Tesla doesn't stop. Now you're hearing that, by the way, Polestar, which is the Volvo brand for all purposes, they have just joined today, and they said, we too will join your charging, and we will modify so that our cars can go with it. This is all just powerful stuff. People ask me about auto companies. I don't think Tesla's an auto company. For a while I did, but the more I look, they've got the batteries, they've got the charging stations, they've got now something else. Everybody's getting killed. Everybody being Ford, GM, Polestar, all these companies are getting killed, and the new startups trying to build cars in any quantity to make money from. We're talking billions. This company's able to build them. You know what their average profit is on a car right now? About 19%. Do you know what Ferrari came out with and said their average price per car profit? Do you know what it is? 50%. Now, you are talking a car that starting price, $2.25 million, versus they want to go into cars that are as low as $23,000 now. I'm telling you, it's a whole different type of company. You want to pay attention. AMC, bring your whip out. Will Indy save the day? Because this is it. Indianapolis Jones, come on. You'll have an idea he did if the market can get up and over the high right through here. Let's see if I can bring you to it. I should be able to. One more of these. Come on with me, please. There you go. That number's 482. So if the market can get over 482, I get a little bit interested in the market. Barring that, you're oversold. I'm not too interested in ever telling clients go short oversold markets. $3 trillion. Wow. It flirted with getting there intraday before, but it's never settled like that. $7 gain. When I tell you this is fear of missing out money, that's classic. Bull trend, they're buying. Doesn't matter what the earnings are. Doesn't matter what the products are. They're going to own Apple, and it just took on its own life. Google's got some problems, antitrust, trying to acquire companies, but it's got a big problem for me. Throw the name of the chart off. That's what I tell you to do over and over. You just lost the reading, the bullish embedded reading. You had a reading at 76. At a minimum, this is a get out of all longs. Now, next week, if the red line's back over 80, you got to plow in by weekend. Barring that, the odds favor, you're going to make a run back to the 18-week average of closes. I'm sorry, that's the news that we have. So you put it together, you get game plans. And your game plan, as I see it, you don't have to agree with me, take advantage of the 50% off. You're not committed to anything. You can quit at any time. It's that simple. But you don't get this from me very often. IraEpstein.com research. Move your cursor up here. You choose the package. I'll see you come Monday morning. Have a great weekend.